Good morning, everybody, and welcome to the October 3rd issue of the Tucson Mortgage Weekly. Thank you very much for tuning in. Obviously, spring is in the air, even out here in sunny Tucson, as we're well below hundreds and expecting 80s this week. Hopefully, wherever you're watching from, you're having good weather. Hopefully, the rain back east will stop. Anyway, let's get right to what's going on. Okay, last week, what happened? Well, it wasn't much of a surprise, but the Greeks missed their 2011 financial goals, which was not at all a surprise. And what that actually is tantamount to is they missed making a payment, which in my way of looking things is default. So the only option that's going to happen, or the only next step that could probably be, is that all of the current holders of the Greek bonds and Greek debt are probably going to have to take some kind of a haircut because they're not going to get money. They're not going to get payments. And so ultimately, they're going to have to settle for less or back-end load it onto some other bonds. But ultimately, this is the first step to a full-blown default. So right now, the woes in Europe continue. And that kind of brings home to roost that things here in the U.S. ain't all that bad. If you're listening to the politicians and the talking heads, it's nothing but gloom and doom out there. So anyway, okay, what happened this morning? Well, early, first thing, the manufacturing report came out, ISM, which is a monitor of how things are doing in the manufacturing world. And a number above 50 means that things are improving. Last month's report was 50.6. This morning is 51.6. And it's not that 51.6 is great, but it's still above 50. And that's a good sign. That means we're kind of sort of hanging in there on the neutral line. The other thing, what's going on this morning? Well, today starts the new Fed's program, Operation Twist, which is what they're doing is using funds that they have from selling short-term bonds and securities, and they are buying long-term bonds and securities. Today, the Fed is buying $2.5 billion of long-term bonds to bring long-term rates down. Now, $2.5 billion is not all that much, but clearly it's a start. And so the knee-jerk reaction of seeing things go wildly nutso a week ago have kind of come back and settled down a little bit. So let's see what happens with the implementation, because the devil is always in the details, as they say. This week, okay, all eyes right now, this week, all eyes are on jobs. Jobs. I mean, right now, the Obama administration is saying that he's going to have a bill to vote on, present to Congress, I should say, for them to vote on the end of October. Let's see. The ADP report comes out on Wednesday, which, although is not official, is always it makes the market go kind of crazy in itself. And then Friday, the big job report comes out. Right now, unemployment is something in the area of 9.1%. And let's see if we have what the forecast is supposed to be. I should have checked that first, but bear with me while I get that. And, well, here we go. It looks like they're expecting it to be flat in that 9.1, and there is no real forecast at the moment for what the actual job number, the actual jobs number is going to be. We'll probably get that out later in the week. Anyway, back to what's going on. Well, I also put in my blog post last week that we're expecting the VA insurance or the fees that are being charged to veterans on VA loans is supposed to drop dramatically, but through some magic of television, some bill didn't get signed, and now people like myself in the mortgage banking world are trying to figure out what the hell to do because we're supposed to be charging the lower fees rather than the higher fees, but the government's not ready to buy them yet, but we have to fund loans, and people are trying to get in houses, and what we're ending up is we're getting slapped on both ends of the face here. So stay tuned for what's going to go on with that, but that's another one of we're with the government and we're here to help. Okay, so rates are great. You should be locking. Lock. I'll continue that. Jobs and locking. Okay? If you have any questions, give me a call here. Todd Abelson with Sun Street Mortgage in Tucson. You can reach me at 331-LEND, 520-331-LEND. Don't forget to check out the TucsonMortgages.com website and the blog, and I really appreciate it. Wishing you a great autumn week, and have a great day. Bye-bye.